Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. U.S. President Donald Trump is threatening to block the opening of a new bridge connecting Ontario and Michigan. Trump says he will start negotiations with Canada immediately and will not allow the bridge to open until the U.S. is fully compensated and given ownership of half of it. Michigan's governor says the bridge was paid for by Canada and built by union workers from both countries. It will be operated under a joint ownership agreement between Canada and Michigan. Air Transat and WestJet will be suspending all flights to Cuba due to the island's fuel shortage. Cuba has warned airlines won't be able to refuel at its main airport for at least a month. Both carriers say flights will be suspended until the end of April. Air Transat and WestJet are in the process of sending planes down to get customers back to Canada. They say the aircraft will carry sufficient fuel to safely depart without having to rely on local availability. The move follows Air Canada, which suspended flights yesterday. Shares of Vizsla Silver taking a hit today, off by 8.4% almost. Mexican authorities say at least 5 workers from the Canadian miner have been found dead. This after 10 of them were abducted from the company's site last month. The Mexican government says 5 other bodies have been discovered, and they are working to identify them. Vizsla suspended operations at the site last month after the individuals were taken. The company says an investigation continues. And taking a look at the markets, you can see the TSX into record territory right now, over 33,200, up by 0.6%. It is having another banner day today. Well, as we continue to push through earnings season, our next guest thinks it's much better than what has been reflected in markets so far. Let's get more on this and a preview for the upcoming jobs data from Art Hogan, Chief Market Strategist at B. Riley Wealth. Art, thanks as always for joining us.
All right, Roger, thanks so much for having me.
Okay, so the markets and earnings, they're good. And you think people should be reacting a little happier to them?
Yeah, it's interesting. So we kicked off the earnings season 3 weeks ago with the banks, and unfortunately all the banks came into the earnings season at or near all-time highs, so the reaction function was kind of sell the news. But that's played out throughout the course of the entirety of the earnings reporting season. We've had almost 80% of companies that are beating on the estimate, on the earnings estimates, and 72% are beating on the revenue estimates, and that both those numbers are higher than the 5-year average. Earnings growth is significantly higher than we thought it would be at the start of the quarter. And most importantly, guidance for the calendar year of 2026 has gone higher. So the estimate for the S&P 500 earnings for this year have moved up from about $307 to $312. All of these are positives. But when we get wrapped up in a market that's got concerns over AI spending and software Armageddon and those types of things, it's hard to have that intuitive reaction function when companies report earnings. I think the great fundamental backdrop here is just that, right? Earnings growth in the fourth quarter, 6 quarters in a row of double-digit earnings growth for the S&P 500, and estimates for this year going higher are all really positives. And once we can see through some of the noise around things and the concern over AI CapEx and things around the sort of software being disrupted by artificial intelligence, I think market participants will start to glom onto the fact that we are actually trading at a better multiple now than we were as we ended the year for the S&P 500, and we don't need to have much multiple expansion to have a very good year in the market.
Do you think it's going to take, you mentioned it would take something to kickstart it. Will it be one main event, or is it going to be a few things where people start to go, you know what, these earnings are good, we should be looking and taking advantage of it?
Yeah, I think it's going to take a few things. First and foremost, we get really important economic data this week, and I think that could be a trigger, right? So on Wednesday, we get the delayed non-farm payroll number. That looks to be about anywhere between 65 and 75,000 jobs, which would be significantly higher than the 3-month average, which is about 30,000 jobs being created on a monthly basis. So if that comes in and has a pleasant number to it, unemployment either stays unchanged or ticks down another notch, I think that'd be another economic data positive. And then on Friday, we get a CPI. And if that remains cool, unchanged month over month, I think investors will feel more comfortable with the fact that the Fed is doing the right thing by staying on pause until probably the month of June. And I think that'll give a better sort of backdrop to just how the economy looks. I think the retail sales number that came out today was a bit disappointing, being flat in December. But if you look at the 2-month average, November was much better than had been anticipated. So the 2-month retail sales number looks a whole lot better than the report we got on December.
And if we get a mix from those numbers, it's unusual. We get them all in 1 week. But because of that mini shutdown, I guess you want to call it that, where that's what's the delay. Will they could they cancel each other out if they're opposites, or how will people react, do you think?
Yeah, that's such a great question, Roger. We don't ever get a CPI and a non-farm payroll number in the same week. So that mini government shutdown gave us that gift. So we get the two most important pieces of economic data that you get in any month in the same week. So to your point, could you have equal and opposite reactions if there's a negative surprise in either one? First and foremost, I think that the consensus is probably high for the non-farm payroll number. And I think anything north of what that 3-month average has been will be seen as a positive, especially if it doesn't move unemployment and the labor force participation rate remains firm. On the CPI, I don't know that the PPI that we got last week will flow into the CPI. There really hasn't been much of a correlation for the last 12 months in those two numbers. And most of the CPI that gets reported is well known in the market. So if we get a inline CPI and a slightly weaker jobs report, I think that's going to be fine for markets. I think where we'll get concerned is we have an upside surprise in the inflation number and a solid jobs number, which will likely push out any rate cuts into the middle of this year from the second quarter.
And any kind of a factor for the small business optimism index that came out?
Yeah, I think the NFIB is good, as good as surveys get. I think that what's interesting to me is that while the components of the index were a little lower than anticipated and a touch lower than the month before, the intentions to hire actually ticked up a little bit. And that's probably one of the most important pieces of that NFIB survey. And in so much as we have north of 60% of jobs created by small businesses in this country. And I think that the intention to hire is a positive in what otherwise is seen as a weak labor market right now. So I think there was a silver lining in what had been a kind of a cloudy report that we got this morning.
And just going back to earnings for a sec, we have some big names coming up this week. Coke just came out today. A little disappointing. What will you be looking for over some of the earnings over the next few days?
Yeah, Coke was unfortunately one of the beneficiaries of the rotation that we've seen this year. Is staples have gone up, and Coke and Pepsi sort of sit in that staple world. So they actually had unattainable multiples, and I think the staples themselves have gotten to a place where they've gotten stretched in the short term and on multiple basis. So Coca-Cola reporting at a time in which it's had a significant run up. If you look all the beverage companies, they've had that, and that's part of the consumer staple group that has certainly benefited from this rotation out of technology and into the others sectors. And so therefore Coke can have a great report and sell off. It's very much like the first week of earnings when JP Morgan had a blowout quarter and the stock went down, but the stock was trading at an all-time high and was up some 30% on a 12-month basis.
And could you see do you think we'll see any rotation back into tech, or is everybody going to kind of sit for a bit now?
No, I think we're starting to see that. So if you look at the IGV, which is the software index, when we went through that last week's sort of software disaster with concerns over AI disruption, it got very oversold, and that's had a significant bounce off of those lows. So if you look at the relative strength index, usually you want to be in a band of 30 to 70. That's sort of a normal indicator. That got down as low as 12. It's the lowest that index has ever seen in its history. So it's bouncing off of that. I think you're seeing some logical dissemination of potential disruption, but not this ongoing selling of technology. So I think we're going to see a bounce in technology for sure. NVIDIA will likely usher some of that in when they report in 3 weeks. And we certainly know all the hyperscalers have continued to talk about how much they're going to spend. And clearly NVIDIA will be a beneficiary of that. And that's a stock that really hasn't done anything in 6 months. So I think if you're looking for a catalyst for improvement, A, the sector got oversold, and B, NVIDIA will likely be a trigger point when they report in several weeks.
Okay, we'll have to leave it there. Arpa, thanks as always for joining us.
Thanks so much for having me.
Art Hogan, Chief Market Strategist at B. Riley Wealth. Coming up, Coca-Cola shares, as we just mentioned, shaken up after a mixed earnings report. Our next guest breaks that down after this. Coca-Cola posted mixed earnings results for its fourth quarter. The beverage company missed on revenue estimates, but slightly beat on profit and set modest expectations for growth this year. To get reaction to that, we're joined by Peter Grom, equity research analyst at UBS. And Peter, thanks as always for joining us.
Thank you so much for having me.
Okay, initial reaction to the report.
Look, I think the stock reaction kind of makes sense to me for three different reasons. One, as your prior guest alluded to, I think there was some great expectations around Coca-Cola. It has been one of the best performing consumer staple stocks for not only this year, but for the last, call it 12 to 18 months. And so, valuation was already stretched for Coca-Cola heading into today. Second, I would say the quality of the earnings print, you alluded to the revenue miss. Organic sales came in marginally ahead of street expectations, but the composition of that was a little bit mixed. There was a unit case volume was a little bit more challenged, and price mix came in a little bit below expectations. And I think the last, and maybe most importantly, it really comes down to the guidance, right? I think the company delivered 5% organic sales growth this year. They're kind of guiding to 4 to 5%, which would imply a bit of a slowdown as you look out to 2026. And then I think on the earnings front, I think people were expecting better underlying expectations. Specifically, the 7 to 8% total company EPS growth would more or less suggest street numbers don't really need to change all that much. But I think the company outlined 5 to 6% underlying growth, which is a little bit below what we've seen historically. It's below the company's long-term, historical averages. So I think, at the end of the day, it's not a bad print by any stretch, but I think it's just a combination of the print and the outlook being a little bit below expectations and valuation being ahead of itself a little bit into today.
And it faces some pretty serious challenges right now, doesn't it?
Yeah, across the board, and like many other consumer staples companies, but yeah, it's across the board.
What's the biggest concern for you? Is it the people turning away from sugary? I mean, so many people go into weight loss drugs now, and they're starting to stay away from it. That's a challenge to try and sell sugary drinks, and I know that's not their only market, but that's a big part of it. Is that their biggest challenge, or trying to get? They were excluded from food. What do you call it down in the States?
The SAP, yeah.
Yeah, the SAP. Is that a big? What's the biggest challenge for them?
Yeah, I mean, from a business perspective, there's two things, right? There's the stock perspective, right? And I think there's the business standpoint. I think from the business perspective, right, I think, the GLP-1, headlines are very important, and they're a big, important topic of conversation, I would say. But for a company like Coca-Cola, right, that they're very global. Right. And so you have to think about this GLP-1 dynamic, is really more of a developed market, more of a U.S. narrative. So they're not going to be as impacted as maybe some of the other staples peers, on a total company level. And then when you think about beverages, right, I mean, yes, soda, sugary beverages, it's kind of the poster child for GLP-1 in some ways. But you have to remember they have zero sugar offerings, they have diet offerings, and they have a lot of other products, in water and juices and protein drinks that are going to be more on trend with it. So I think at the end of the day, it's just, I don't want to say that they don't have an issue as it relates to kind of top line growth, but I think they're probably going to see more durable growth over the next 12 to 18 months versus much of the rest of the group. I think from the stock standpoint, it's a little bit different, right? I think what you're seeing, or what you've seen over the last, call it 2 years, is there's been a very few names that have worked in consumer staples, and Coke has been one of them. And so what you're starting to see across the space is what I would call a broadening of growth, this rate of change narrative taking hold, where things are going from bad to less bad, some going from bad to some cases good. And I think as that happens, you're seeing greater interest in other pockets of staples, maybe where there's more room for relative multiple expansion. And I think that's kind of been more of the challenge for Coke as you think about it relative to other staples peers.
And now Henrik Braun is coming in as the new CEO. I mean, he's been with the company for, I think, 30 years, pretty much work through it all. How is he being received, and where do you see him taking it? Do you see him doing anything extreme, or just kind of nudging the ship along?
I think it's more nudging the ship along, right? I think James Quincy has done a phenomenal job in his tenure as Coke CEO, right? I think they've, a decade ago, there was debate around, whether Coke could ever deliver on their long-term organic sales target, EPS targets. They had kind of installed that at a $2 earnings per share number for a really long time. And he really kind of, righted the ship. And they've done a tremendous job in terms of delivering, stronger top and bottom line growth. So obviously, you can't rule anything out. Every new CEO wants to have their own, their own take on the business, but I would not imagine or expect any major changes on the horizon here.
Okay, and we touched briefly on international markets. China, how are they doing with China? They're struggling a little bit, right?
They had a more challenging quarter than maybe what we've seen historically. It was a little bit of a weaker exit rate. I don't know that I would say that's unique to Coca-Cola. I think you're kind of seeing that in a lot of other pockets of staples companies, with maybe the exception of beauty.
All right, Peter, we'll wrap it up there, but thank you as always for joining us.
No, thank you so much for having me.
Peter Grom is equity research analyst at UBS. Coming up, today's market drivers with Bloomberg's Monique Molina. Okay, time for some market drivers of the day. We're joined by Bloomberg Equities reporter Monique Molina. Monique, thanks as always for joining us.
Of course, thanks for having me.
A horrific situation down in Mexico with Vizsla Silver.
Yes, it was sad for them to have to announce yesterday that 5 of their workers had been found dead in Mexico. Vizsla announced back in January that 10 of its workers were taken from their Pinoco project, which is in the Sinaloa state in Mexico. They announced yesterday that they'd been informed that some family members of these workers had said that their relatives had passed away. And then the Mexican Attorney General confirmed yesterday that they had found 5 of the 10 people, unfortunately, dead, and they had found an additional 5 bodies. The company has suspended their operations at this mine while they've been kind of undergoing this investigation and trying to figure out what's happening. And we're seeing that weigh on shares, especially with this news of the confirmations today. The shares are down over 20% over the past 2 days, and they're continuing to extend their losses.
Okay. A rough day for Wesco, miss on their EPS, and also losing their CFO.
Yes, so Wesco shares, they were down over 10% this morning after they reported earnings, and like you mentioned, also reported that their CFO is leaving. The electrical company missed on broadband and utility sales, and that was what was weighing down their earnings results. Analysts say that these results were disappointing. Their declines were more than anticipated, but they do see hope that things can improve. The company also operates in the data center space, and that's where analysts really expect to see more of that growth going forward with the rising demand for AI power needs. They think that's where the company is really going to be able to show strength in data center as opposed to some of their more traditional segments.
All right, and last one, Coinbase. Their PT lowered, big lowering from JP Morgan for them.
Yes, so Coinbase, their price target was cut by 27% by JP Morgan. Like you said, this is quite a big drop for the company. Coinbase has seen declining revenues and trading volumes as crypto prices have declined. They get most of their revenue from the crypto space as an exchange. And as we've seen Bitcoin prices, drop over 30%, we've seen a lot of pressure in crypto markets, and that's also led to people trading less. And because Coinbase gets a percent of every person who's transacting on their platform, they're getting a percent of those trading revenues. When the prices of the coins are going down, when people are less invested in crypto, that's going to also weigh on their earnings. And that's really what the analysts are expecting to see. The company is reporting fourth quarter earnings on Thursday, and they're expecting to see a substantial decline in their earnings. They do note that the company, this will be the first quarter that Deribit, which is like an options space company that the Coinbase had acquired, this will be reflected in their earnings for the first time this quarter. So that's expected to provide a bit of a boost. But they say even with that, there's still going to be quite a large decline because of this share price declines we've seen in the crypto space.
Okay, we'll leave it there. Monique, thanks as always. Bloomberg's Monique Molima. CTV's Heather Wright has more on the devastating impact of the U.S. fuel blockade on Cuba. The country is facing its worst economic crisis in nearly 70 years.
This is just the latest sign of the dire situation unfolding in Cuba. There isn't enough fuel for airplanes to refuel on the island as the communist nation struggles during a deepening oil blockade.
We came to Cuba knowing what to expect. There's some things you'll have every day, some things you won't. I mean, that's a norm for here.
But what has been the norm is quickly deteriorating for the people who live in Cuba, with shortages of food, fuel, and medicine. Air Canada has announced it's suspending services and will send planes to repatriate the roughly 3,000 passengers still in the country. WestJet, including Sunwing, has suspended ticket sales to Cuba and will begin what it calls an orderly wind down of its winter operations there, while Air Transat has issued a travel notice allowing for flexible changes or cancellations. This all comes as Cuba experiences the worst economic crisis in nearly 70 years.
By the typical definition of what we think of as a failed state, Cuba is sort of on the cusp of it.
For decades, Venezuela had been the primary source of oil for Cuba, a source that was cut off when the United States captured Venezuela's president in January. Then U.S. President Donald Trump said he would impose tariffs on any country that sells or provides oil to Cuba, further depleting its sources of fuel. The government has closed some hotels and is relocating guests to save on resources. Fuel sales are being limited while school and business hours have been reduced. Tourism is critical to Cuba's economy, and those returning home worry about ordinary Cubans.
It's just really unfortunate because of the Cuban people, and they have so many shortages there as it is.
Cuba has said it is open to negotiating with the United States to end this oil blockade. Meanwhile, the government is telling its citizens to prepare for hard times beyond what they are experiencing now.
It was CTV's Heather Wright. Coming up, what does a decade of data tell us about Canada's automotive future? We'll find out after the break. U.S. President Donald Trump is threatening to block the opening of the new Gordie Howe International Bridge between Windsor and Detroit unless the U.S. is fully compensated. Trump claims Canada has benefited unfairly from the project, though the bridge is publicly owned by Canada and the state of Michigan, with Canada funding construction and recouping costs through tolls. The long-awaited crossing is nearly complete and expected to open later this year. Shares of Spotify are soaring today, 15, almost 16% right now. The music streaming giant added a record number of users in the fourth quarter, far surpassing expectations. The Swedish company cited the launch of an enhanced free tier for users as contributing to the growth. Operating income and first quarter forecast for monthly active users also beat estimates. However, revenue from ads shrunk year over year. Shares of Coca-Cola are falling, although they've slowed a little. They're still down about 2% right now. This after the beverage giant posted net revenue that missed estimates. Coca-Cola also gave a full-year sales outlook that came in below expectations. On the upside, the company saw continued strength in Coca-Cola Zero, which grew 14% last year. Coca-Cola has been working to expand into non-sugary drinks as demand for full-sugar sodas has declined. And taking a look at the markets right now, the TSX having another good day, up by 0.66%, well above 33,000 into record territory if this holds. And looking south of the border, kind of a wash day, really, when you look at it. The S&P 500 up ever so slightly, hardly. The Dow, though, still pushing up above 50,000 and record territories up by 0.37, while the NASDAQ, not sure where it's going. It's down ever so slightly. Time now for Hot Picks. We zeroed in on 3 plays in the biotech sector with Jeff Meacham, global head of healthcare at Citi. We kick things off with his first pick, Eli Lilly.
I do feel like with Lilly's injectable business, Zepbound and Mounjaro are both growing nicely, but also orforglipron is really one of the reasons why you want to own this stock is their pill, which is going to launch, in a maybe an April timeframe. I think it's going to really dominate.
And that, of course, is a pill weight loss drug.
That's correct. Yeah.
They have other irons in the fire, though. They have a medicine in inflammation as well. Can you tell us a bit about that?
Yeah. So what's interesting is that the GLP-1 mechanism of action is broadly applicable. And what Lilly's finding is that it could help amplify the clinical effect in other diseases. So they just recently had data, for an inflammation drug, Taltz, that the GLP-1 makes it better. So I think that could, provide an extra leg of fuel for their inflammation business. Maybe down the road, oncology or neurology, GLP-1s work, in a broad way. And I think that that's something that obviously not in the stock at all.
Can we move on to Vertex Pharmaceuticals? One of their core businesses, cystic fibrosis.
Yeah, this is a great business for them. There are very few competitors here. Vertex is really dominated and probably should continue to dominate, really. And the IP goes really quite far out. We're talking late 2030s. The issue with Vertex is really, what is the encore to their success, right? So they have a drug for non-opioid pain relief, and they have a cell therapy, a gene-edited product for sickle cell anemia and beta thalassemia. And now they're adding a drug. We'll see maybe this Thursday when they report, fourth quarter earnings. There's a drug for a kidney disease called IgAN. So a fourth, drug to the mix here. So that's probably the bigger focus of Vertex. The CF business, I wouldn't ever say autopilot, but it definitely feels like, it's sort of, it's going on autopilot.
And then Regeneron Pharmaceuticals, you see this stock climbing to the $900 range. What are their crucial growth areas?
Yeah, so Regeneron has had for many years, 3 legacy businesses. So Eylea for an ophthalmology drug, Dupixent, which is a drug for many different types of inflammation conditions, and then Libtayo, which is an oncology drug. Those are still, growing nicely. Eylea has had some generic competition and had some branded competition, but that's fine. It's held its own. But the reason why we like the stock here is the pipeline. So they have a next-gen drug for melanoma that could be, anytime in the next couple of months. And then a very, very deep pipeline in the oncology hematology franchise that, in the next, call it 1 to 2 years, we'll see a lot of data points, a lot of phase 3 reveals, phase 2 reveals that should be very positive for the stock.
What is the latest thing in oncology? Can you generalize for us? What are promising areas of research right now and new drug development?
Yep. Yeah, there are a couple different technologies that have been used. Antibody drug conjugates, this is where you attach a toxic payload, a bit of a silver bullet approach to a tumor. And then immuno-oncology, same thing. It's tools that have been around for a few years, but we're getting much better at engineering more specific immune responses to the tune of what called bispecific antibodies. So there's a lot of excitement there, and there's a lot of companies in the mix too. So it's not just about gene and cell therapy. There are many, very, I would say, validated and foundational technologies that are still growing quite nicely.
And a company like Regeneron, what's a crucial driver? I mean, they obviously want to get a blockbuster. Everybody does. Would they ultimately get taken out if their product is big enough?
It's a great question. Yeah, it's one of the bigger, larger cap biotechs by market cap. But they have a very deep science, a great, technology platform, and they're in multiple areas. So I think the big driver here would just be, turning the data card over on many different things in the oncology hematology pipeline, but also the inflammation pipeline. Those are the two core areas for them. It's not that, that they need more, but I think they have so many assets that are in early to mid development that are really kind of, could be groundbreaking. We'll have to see.
And he was talking to Jeff Meacham, Global Head of Healthcare at Citi. Well, you're watching Morning Markets on BNN Bloomberg. We'll be back after the break. Canada is pursuing free trade agreements with a number of countries and intergovernmental bodies amid the reorientation of global trade and supply chains in the wake of U.S. tariffs. Now, Canada's Minister of International Trade, Maninder Sidhu, spoke to Bloomberg's Daybreak anchor Lizzie Burden in Singapore. Have a listen.
It really speaks to, our focus and our goal of doubling non-U.S. exports to the tune of $300 billion. And what does that mean? It means more opportunities for Canada here in the Indo-Pacific, in Asia, but of course it means more opportunities in Europe for Canadian exporters. And so as we lead up to it, there's, if you look at how fast Asia is growing, they need more energy. With the data centers popping up everywhere, they're looking at Canada for that energy, but they're also looking at Canada for food security in terms of agriculture goods, but also critical minerals. As you know, Canada is resource rich in that. And so at a time when you're seeing a lot of ruptures in the global trading system, Canada is seen as a reliable, stable partner. And those are the phone calls that we're getting, is that we want to do more with Canada. And you've heard that from the Prime Minister's speech in Davos when we were there together, was about middle powers coming together and really respecting rules-based trade and pushing forward.
OK, loads to unpack here. You mentioned energy. What have you been hearing on your travels about appetite for Canadian exports like energy specifically?
Yeah, around LNG is what I'm hearing. Currently we've got 5 different projects in various phases of development. It was a milestone moment for Canada with our LNG Canada 1 project in June, our first ever large-scale LNG shipment going to Asia outside of the U.S. And so that speaks to our diversification efforts. How I'm going to get to the $300 billion target is obviously through energies. And so you're seeing that those projects are being built, they're being developed. But we're fast-tracking many of those projects through legislation that we've changed in June. Canada is now building at much faster, much quicker speeds than we've ever done in the past. And so as Asia builds, as they build data centers, as they grow year over year, you speak about India, 6, 7, 8% growth year over year. They need 70% more energy by 2040. Guess what? Canada is well positioned to serve those markets.
And give us a sense, Minister, of how much Singaporean appetite you've seen to invest in Canadian ports, for example. Have you had any meetings around that?
Yeah, absolutely. I mean, when you come back to our strategy and our take on hitting the $300 billion of exports, additional exports, we're going to need to add capacity at our ports. And so we're doing that. We've got a $5 billion trade corridor fund as a federal government, but we're also working with partners. I've met with PSA, we've met with GIC, Temasek. They are all comfortable investing in Canadian ports, in Canadian infrastructure projects, and there's conversations to do even more in Canada. And just in the Gulf region, I was there a few weeks ago. They've committed to doing about $70 billion of investments in Canada, in infrastructure, in mining, in energy projects. And so we're building up capacity, and we're welcoming investments from all around the world.
And what's the latest on the Canada-ASEAN FTA that Prime Minister Mark Carney pledged to finalise this year?
Yeah, Philippines is now the chair of the ASEAN, and we're continuing to have conversations with the Philippines to get it through. Of course, there's many partners, as you know, over 10 partners in the ASEAN region that we need to continue to engage with, continue to explore opportunities. But we're having active negotiations. Our negotiators are in Jakarta this week having their round of negotiations, and we'll continue pushing forward. The Philippines has made Canada one of their priorities as the chair, and so we'll continue engaging with that. But this year alone, since you asked about FTAs, free trade agreements, we've got a handful that we're moving forward on with India, Philippines, Thailand, UAE, Saudi Arabia, ASEAN, Mercosur. And so you see there's a lot of work ahead of us, but I think the appetite is there from many of our partners around the world to make sure that trade works. Just in the past 9 months alone, we were moving really fast at record speeds. We typically sign one agreement a year. In 9 months, we've done multiple agreements with the UAE, with Indonesia, with Ecuador, and many others. And so there's an appetite there to do more with Canada. As I said to you before, it's about reliable, rules-based trade, and Canada stands for that.
You're a busy man, Minister. Which of those deals is closest to the finish line?
So we just completed Indonesia, Ecuador, and the UAE. We're starting with India in the coming weeks. Philippines as well. It was something that we signaled when we were in Malaysia not too long ago. But of course, we're going to continue moving forward. Mercosur is another one of those important trading partners. But again, when you're dealing with multiple countries, you need to make sure you match their speed and energy. And we're going to continue to have those conversations to push forward.
And Canada signed this deal with China to cut tariffs and attract Chinese auto investment. Of course, that drew the ire of President Trump. Coming back to my original question, Minister, how is Canada balancing the upcoming USMCA talks with your push to grow non-US exports?
Yeah, when it comes to the U.S., look, they're our number one trading partner, will always be an important trading partner to Canada. And those discussions will continue. There's another minister, Minister LeBlanc, that's in charge of Canada-U.S. relations. My focus is on international trade diversification. And so I was with Prime Minister Carney in China a few weeks ago. It was to make sure that we're exploring opportunities, but also to work through some tariff challenges that we were having in the agriculture sector. And we were happy to come in with an arrangement to give our roughly $7 billion of agriculture products preferential access to the Chinese market. So resolving that was very important, but also unlocking opportunities around electric vehicles. And so we're going to be allowing up to 49,000 vehicles into the Canadian market with the hope of joint venture partnerships, between Chinese and Canadian companies to build those EVs in Canada. We're a large market. Canadians consume or they purchase about 1.5 million vehicles every single year. They're asking for more options, but it's not just with the Chinese. We had the South Koreans there last week. I hosted Hyundai. They're looking at opportunities in Canada. And just earlier today, we had the German Minister of Economy visit Canada to talk about, some type of economic cooperation between Canada and Germany, but also to explore cooperation around automobile manufacturing. And so this is a conversation that's happening with many countries. And why is that? I think it's important to mention is on the mining resources, we are heavy resources in terms of what we have. We're the only country in the Western Hemisphere that have every single element to make an electric battery. And so I think it's important we have those conversations. And this is why automakers are looking towards Canada, and we welcome that.
Coming up, U.S. President Donald Trump is threatening to block the opening of the Gordie Howe International Bridge in Ontario. We'll have more on that from the Mayor of Windsor when we come back. The Gordie Howe International Bridge is being threatened by the U.S. president. The bridge is a $4 billion project that serves as both a physical and symbolic connection between Windsor, Ontario, and Detroit, Michigan. Trump says that he will block the opening unless the United States is, quote, fully compensated for everything it has provided to Canada. We're not clear what that means. For more on this, we are joined now by Drew Dilkens, the Mayor of Windsor. Mayor, thank you very much for joining us today.
Good morning.
Never a dull moment with the president. You really haven't pulled any punches on your thoughts about him, though.
Well, it's just par for the course. Every day is a different Donald Trump story. And I've lived here from the very start of the conversation about this Gordie Howe Bridge. And from the time the conversation started until the time the bridge opens sometime this year will have been 25 years. So think of the prime ministers, the presidents, the governors, the premiers, the mayors that have been involved on all sides of the border, making sure that this project proceeded in a timely way, in a thoughtful way. The bridge is built. The connections are made on both sides of the border. The port of entries are built. Customs officers have been hired. And so it's difficult to imagine that this won't open. But clearly Donald Trump throwing a grenade on social media and suggesting that he's going to block it until the U.S. is made whole. I'm not really sure what he means because at the end of the day, the U.S. didn't contribute to this project. This was paid for by Canada and Michigan.
I have a few questions. First of all, do you think he could block it? Have you had a chance to look at? Are there any legal ways that he could do this?
I'm not entirely sure. I'm sure the teams are looking at that. I would suspect his mechanism would be to starve Customs and Border Patrol resources at that border so that it couldn't effectively open. But at the end of the day, it only serves to the disadvantage. Not only, it's our disadvantage too, but it serves to the disadvantage of folks who work in Michigan, Ohio, Indiana, Kentucky, who are looking forward to having this seamless border crossing open between the busiest commercial corridor between Detroit and Windsor and U.S. and Canada. The auto sector on both sides of the border here operates on a just-in-time delivery basis. This bridge will be the most seamless, quickest way to cross the U.S.-Canada border when it opens. And why would you want to do anything and take any action that harms workers and employers on the U.S. side of the border? If you're the U.S. president, it's beyond me.
And I mean, I think it's $1 billion a day is the number I've heard. I lived and worked down in Windsor, Detroit. I love that area. And they were actually, I mean, you're really one place when you're down there. I think everybody down there sees each other as brothers and sisters. With this, we heard him say, I think, that there was no American steel that was put in this, or they avoided the Kuzma deal. But everything's gone by the book, and this involved the mayor or the president in his first term.
It's all lies. Don't believe any of the nonsense that was in that post, because a lot of U.S. steel went into the construction of the bridge on the U.S. side, the construction of the port of entry on the Michigan side. All of the work that was done in the state of Michigan to connect this bridge to the highway interstate system was probably all U.S. steel. Over 8,000 U.S. workers worked to help produce this bridge. There were 15,000 folks who were trained and worked on the bridge. 8,000 came from the United States. And so it is nonsense to believe that there's no U.S. steel or U.S. building materials that went into it. It's completely wrong. And it's part of the frustration of Donald Trump that he doesn't use facts when he talks about issues. He just throws out and makes up his own facts. This is just another example of him doing that. And he's completely wrong.
And you're getting, of course, a lot of support from senators in Michigan, and representatives are all rallying to this as well. They know the importance of this.
Well, we built this together, and I think they understand that we built it together. And even the folks on the Michigan side, on the U.S. side, in Michigan, Ohio, Indiana, Kentucky especially, they understand how important this is for business and employees in their respective states. And the thought that the president would do something that would thwart the growth of business, that would thwart economic development in his own country, based especially on the fact that he created this trade war. Why would you want to do something that actually further disadvantages workers, especially in Michigan, which was a swing state for Donald Trump? So politically, this makes no sense. Economically, this makes no sense. I suspect the bridge will open. I'm confident Prime Minister Carney and Ambassador Hoekstra, who actually hails from the state of Michigan, will find a pathway to make sense with the president, and things hopefully come spring when the weather breaks, the bridge will open. It's just unfortunate, Roger, that this is the type of infrastructure that in normal times, because it's such a once in a generation type investment, you would usually have a Canadian Prime Minister and a U.S. president meet in the middle, cut the ribbon, shake hands, and celebrate the binational relationship. I suspect that's not going to happen at this time, but let's just get the bridge open and help support workers on both sides of the border based on these trade deals and the economy that we've built together.
Never say never, but I might agree with you on that one. You're also the chair of the Border Mayors Alliance, which was formed when all of this exploded. It seems like it was forever ago, but last year. What has happened how are border cities coping with everything that's unfolding?
Well, I mean, it's been difficult, and I don't think our message is probably much different than what people feel across the country, and that relates to uncertainty. And it's just more uncertainty with Donald Trump's post yesterday that he throws into the marketplace for people to digest, trying to figure out how it impacts them. But you have people in Michigan, you have people in Ontario who are saying, you know what, I'm not really sure whether I should book the vacation. Should I buy the new car? Should I renew the mortgage or get a bigger house? They're sort of waiting and seeing until there's greater clarity in terms of what the economic future looks like. And that's not good for an economy on either side of the border. And so the sooner we can get certainty, I know things like this and talking about not opening a bridge certainly speaks to the complexity of that Prime Minister Carney and the team federally will encounter when they try and sit down with the U.S. team this year to talk about negotiations with respect to Kuzma and USMCA. It's going to be a thorny issue because the president likes to cherry pick individual issues, steel, auto, aluminum, softwood lumber, dairy, and try and get a resolution on these singular issues when we're trying to talk about a comprehensive trade agreement that serves to the benefit of both nations and has proved to be very, very successful over the course of many decades.
Okay, Mayor, we have to wrap it up there, but thank you very much for joining us today. We appreciate it.
Thanks very much.
That was Drew Dilkins, the Mayor of Windsor, Ontario. Well, joining us today on Market Call is Julian Nonowamdim, Vice President, Equity Analysis at Good Read Investment Counsel. His focus, U.S. equities. And let's take a quick look and see how the markets are doing on Bay Street, Wall Street. You can see the TSX is well into record territory right now. It is over 32,000. 264, yeah, that's much into record territory. And leading the way are a few different companies. And one of them is Shopify. It got some good news today. And let's see what Shopify is doing. It's up nearly 8%. And just going back to the TSX, I just want to take a quick look at the groups and see how everybody's doing there. Just going to punch that in on the terminal. And virtually every group on the TSX is in the green right now. It's being led by Infotech, up 4%. Only one losing right now, the energy index, but otherwise everything is in the green. It has been a good week. I'm going to get to those losers in a sec. I just want to pull up again Shopify having that good news because they outperform on the AI potential. Some of the losers, though, and of course, Scholastica down 4%, Energy Fuels. The big one, though, Vizsla is down by 9.2% on that horrific news out of Mexico. It looks like the 10 workers there that were kidnapped have been found dead. We're still awaiting more details on that. And that is it for us for the morning markets. Thanks for watching. We'll see you tomorrow.